Well, thanks for having Felton Trading on, and what a great lineup of professional speakers with great information, and we're just proud to be part of the group here, and to share some of what we do here at Felton Trading with your audience. What I wanted to do today was something that I get a request for all the time. You know, when I meet a new trader, and I do that about at least half a dozen times a day. When I ask them what would you like for me to do for you, they tell me, I want a winning trading system. Give me a winning trading system. You know, I bought everything to ever come down the pike. I bought all these indicator packages, and I bought this, and I bought that, and nothing worked. At least for me, it doesn't. Would you just show me, point me the way to a winning trading system? And in reality, you know what traders want. It's control of their financial destiny. And many of them believe that that control comes from having a winning trading system. And the fact of the matter is, a trading system that works terrific for one trader may be a nightmare for another one. For instance, what if the drawdowns were just brutal, just horrible, atrocious drawdown? And a lot of traders just couldn't handle it. They wouldn't be able to stay on that horse. Or maybe it's just too complicated. You know, there's a trading system, and I see on paper it wins. It comes out nicely at the end of the week or the end of the month, but I can't follow it. Man, there's you know, I got to keep 20 plates spinning here in my head all at the same time, and I can't do it. Or sometimes the system is okay, it's profitable, but there just aren't enough trades generated in a reasonable time period to keep it interesting. I had saw one at a trade show that on paper the results look good, but it only found one trade every 3 weeks on average. Sometimes you get 2 of them in a week, and then you'd go for months without seeing another one. But anyway, what I wanted, and I don't want to downplay the importance of having a good trading system, but I do want traders to realize that your trading system must fit you. If it doesn't fit you, it's not going to work. And when I say fit you, I mean fit your personality. How aggressive or conservative are you? It's got to fit your trading style. Are you a scalper like me? Are you a trend trader, position trader, swing trader? Are you a long-term investor? You know, if you're any one of those, then you need to have a system that fits that particular trading style. So the importance of a trading system and having the right trading system for you is very important. But what I'm going to teach you guys today is a little bit of what we do here at Felton Trading, but it's going to be enough, I think, to get your attention, and might see some eyes get pretty wide, because it is going to be simple. It's a simple little system that I use every single day. Now, you know, what do I do? You know, here, let me move my little PowerPoint here along. I do want to say, you know, there's our risk disclosure statement for trading futures. Now, what I'm going to show you will be using examples of futures trading, but realize that this works in anything that you want to trade, any market that moves. Forex, bonds, Nadex, you know, anything, options, equities. I just like futures because it gives me the best, highest profit potential with the least amount of risk in the shortest period of time. Now, if traders like greater risk in a longer period of time, there's a lot of other vehicles out there for you. But I like futures. So you guys can review that risk disclosure. This is being recorded, and you can, if you want to study it in detail, you can watch the recording and freeze frame it and read it over and over. All right. In fact, nobody's going to do that. All right. Now, the truth about trading systems, as I was going to point out, every day in the trading room, my goal with my students trading for 4 hours, actually 3 hours. We start at 8 o'clock in the morning Central. We go to 11 o'clock, and then we spend an hour in training, heavy-duty training. I mean, real professional training, great information that traders need to stay ahead of the game, to stay on top of the game and keep their head in the zone. And we invite all our trial members to come in and not only watch the trades being taken and ask whatever questions pop in their head. We love questions. We encourage questions. And when we get one, we answer it completely, thoroughly, as best we can, with plenty of examples if necessary. Because that's how we learn. That's how we learn to do anything, is by asking questions. But my goal in the trading room, trading just 2 contracts. Now, I trade 2 contracts because I want traders to understand what is possible, what they can do with trading a fairly small trading account. You don't need much of a trading account to trade 2 contracts, or 1, or 3. You don't need much in the way of capitalization. I recommend that you have as much capital as you can afford, discretionary capital, discretionary trading fund. But my goal each day is to make $1,000, to make a 4-figure income. Sometimes it's a couple thousand. I think the best day was 4,000 trading 2 contracts. I've done that. I could count on my hand the number of times I've done that. But I average, my goal, I meet my average almost every day. Almost every day. Today I'm a little under. I'm sitting at $768.60. So I'm going to be a little under the objective today. But as the previous speaker mentioned, it's not about what you did in one single day or one single trade. That's not what trading's about. Trading's about meeting your goals over a reasonable period of time and consistently continuing to meet those goals. So to some traders, making a 4-figure profit, trading just 2 contracts on 6 to 8 trades, that's all I ever take. To some traders, hey, man, that's pretty good. Man, I'd like to do that. And other traders, maybe traders in the group here, that's child's play. I don't know. I do have traders in my room that are better than I am. They do better. I mean, you can see their trades, their results, and I got to hustle to beat them. But that to me, is a perfect trading day. Let me make my goal, and then everybody else just beat the tar out of me. But just understand, guys, the only way to succeed in trading is to learn to trade for yourself. Whatever your daily goal is, you can meet that goal, but only after you learn to trade for yourself. Auto traders and trade along with Joe Blow Trading Room, it doesn't do it. If you've tried it, you know what I'm talking about. Learn to trade for yourself. It's not that hard. You're your own worst enemy. Trading is really not, doesn't have to be, and it shouldn't be a complicated vehicle. It shouldn't be a complicated procedure, but we make it complicated due to what's going on between our ears. You know, trading success is not what happens, not what's going on your charts. It's what's going on between your ears. So that's why it's so important to keep your trading system simple as possible. So let's see what we can do now with some study, some effort, practice. You got to practice. I mean, you know, if somebody handed you a wheelbarrow and you never saw one before, to figure out how to use it and how to move it, dirt from or whatever you're moving from one place to another without tumping it over. You know, it takes a little practice. Even something as simple as a wheelbarrow. Trading's the same way. And I don't care what system you use, you got to practice it. Get familiar with it. It's got to fit. It's got to feel like, you know, fit like a glove. We're going to design now and build a super simple trading system. I'm ready if you are. And I think a really good place to begin is with the bar type that we'll be using. The previous speaker mentioned he doesn't use these time-based charts and tick charts and stuff, at least not very much. He uses range charts. And I used range charts for several years. You know, I've used them all. You name it. Heikin-Ashi, point and figure, you know, time-based, tick, volume, you name it. I've used them. And about 5 years ago, I was looking at NinjaTrader's Renko bars, and I wasn't too impressed. I'll be honest. I wasn't too impressed, but there was something that was intriguing about them. Something that, you know, I couldn't put my finger on it, but I said, these bars have something. There's something. It wasn't in NinjaTrader's version, but with a little massaging, a little work, and a lot of coding, I knew what I wanted them to do. And I got with my programmer. Man, I wish I was a programmer. I wish I was a coder. I get these ideas. They come like in epiphanies, flashes that I say, oh man, I'd love to sit and code this. But all I have to do is get on Skype with my programmer. He is a trader also, and that's not all that common to have a master professional super programmer that is also a trader. He's the guy to tell you how good he is. His name is Rod. How good Rod is when other professional programmers would get stumped on some project they were working on, they'd go to Rod. Rod was their go-to guy. He's that good. So I got with him, and we kicked these Renko bars around, and within, I don't know, it wasn't long, a couple weeks, he came up with two versions. The version you see here that we eventually called the Felton Trading FT Renko Supreme Bar, and then he came up with another version because a lot of traders like to backtest. And you can't backtest unless you know what's going on inside that bar. What happened inside every bar? What did price actually do? Otherwise, these bars will lie to you. The open is always false. It never opens where it says it did. But you need to know the open, high, low, and close. So we have the Felton Trading Renko Supreme OHLC. And now just in the last couple of years, I've been doing webinars for Ninja and brokers and ICE, Intercontinental Exchange, the CME, and just in the last couple of years, somebody took notice because I'm seeing platform providers, system developers, and vendors of all kinds now coming up with their oh, I don't want to say knockoff version, but they saw ours and they wanted to mimic it. And you know, when you got something good, people were going to do that. They're going to try to make their own version of something good. So you saw that. You see them popping up all over the place. And that's great. It's great. But in addition to having these bars, you got to know how to use them. This is very, very important. You know, to just have these incredible bars. These are the most superior trading bars you could ever use. Let me show you what I'm talking about. This is a 1-minute chart of oil, current month. This is on November the 4th. And I saw this and I said, okay, this is good. You can see here how you know, yeah, maybe a good trader could keep up with this and maybe catch some of that downtrend, but going short over here at about 9:30, they'd have gotten clobbered. Absolutely, they'd have been absolutely clobbered, and they'd been clobbered in a hurry. And you've seen this. This is the time-based charts and tick charts are famous for this. Boy, when they turn on you, it's like Cujo. I mean, they tear you up, and you have no warning that it's going to happen. And also another thing I never liked about time-based charts, and I traded them for many years, is they won't hold a color. The bars won't hold color worth a hoot. You got red, blue, red, red, blue, doji, doji, blue, red, red, blue, red, 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 blue, doji, doji, doji. And it's so difficult to when you're trading these bars to predict with what you know, what's going to happen next. And so traders turn to technical analysis. It's all they've got. Is they got to find some way to filter the incredible amount of noise that is generated in these bar types, and not just time-based charts, tick charts, and several other. And I mean, they're just noise factories. Is all they are, and it makes it extremely difficult to trade profitably and consistently. Now let me show you our bars covering the same time period, about 8 o'clock in the morning to 9:42 here on our bars. Same thing, oil, but instead of a 1-minute chart, here's our Renko Supreme chart. Same market, same time frame, same day, same everything, 8:02 to 9:42. But do you see how much more predictable these are? When the bars turn red, they stay red. And when they turn blue, they stay blue. When they turn red again, they stay red. Now this is a 10-5 Renko Supreme chart. This means that each bar, the colored part of the bar, the body, blue or red, is 10 ticks tall. 10 ticks from open to close. Now you can make these anything. I have a 60-30 chart where every bar is 60 ticks tall, and the step size here, it's 5 ticks. That means the close of one bar to the close of the next bar of the same color is 5 ticks. So I call these half-step charts. The step size is half the size of the bar. 10 tick bar size, 5 tick step size. And I like these. The other traders in my room, they use things like a 5-2, a 7-3. I also use what I call a 1-step, and those are amazing. I'll show you what they look like in a minute. But you talk about holding a color. These things will hold a bar color for sometimes hundreds of bars. The bar size might be 10 ticks, 20 ticks, 15, whatever number you want it to be. But the step size, the difference between the close of one and close of the next is 1 tick. So it makes for a very sensitive trend. And it's when that bar finally can't make that last little tick, that one little tick, and it collapses. And when it collapses, it holds the new color for generally quite a while. So anyway, they're so predictable, and you know what's really amazing about them? The best feature about these bars is they clean up their own mess. They filter their own noise. And they remove 95, 98% of the market noise is gone. And you never see bars holding together like this on a 1 minute, 5 minute, 3 minute, 15 minute, 30 minute. You never see bars look like that. But what I was intrigued with was not only these bars and how angular and geometric they are, and how they cleaned up their own noise, filtered it so well. I could come up with. I didn't want. I mean, I didn't want to use the old signals that I used to use. I kept some of them. One of them that I've used for 17 years, and I use it religiously, is divergence. But I use a special kind of divergence that I'll teach you today. So let's look at these things with some signals, and the beautiful thing about these bars is their ability to tell you what they're going to do next, what the market is going to do next through price action. And you probably heard or been on forums and heard traders talk about, I trade price action. And good for them, you know, good for them. If you're trading price action on a say a 1 minute or 3 minute or tiny time-based chart or tick chart, you're one heck of a trader if you're doing it profitably. And you have spent years and years and years and then some more years learning how to do it. Because there's nothing easy about trading pure price action. Like this is just pure price. There's no oscillators, there's no support and resistance, there's nothing. But I believe in incorporating some technical analysis, but I'm very particular. Most technical analysis, guys, if you haven't learned it yet, you will. Most technical analysis indicators and techniques and things are virtually useless. They might help a little bit, but they don't justify the added complexity that you would incur by adding them to your chart or your trading system. And I've seen if you have support and resistance and a stochastic and a Bollinger Band, and you add one more thing, you add a Keltner channel, or you add anything, you've just complicated your trading system by 25%. Now, how much accuracy did you gain by adding that one more thing? And you see so many traders, they've got everything in they got lines going, they got histograms, they've got moving averages, they got MACDs, they got support and resistance, they got trend lines, they got all this stuff. And I found most of them, they have it on their chart, but they don't look at it. They can't keep up with it. But anyway, let's go and learn a trading system. But I wanted you to let you know that the big secret, there's a secret, is these bars' ability to tell you what the market's going to do next. And all you do with technical analysis is take what the bars say the market is going to do next, and it'll be right most of the time, and use the technical analysis to spot areas where there might be a problem, or spot when the markets might be starting to get soft. You know, these bars here may or may not tell you, but you can combine things. I use support and resistance. I use oscillators. I use a histogram, and well, you'll see. Let's go to the charts here, and we'll go to the live market, And let's master the predictable behavior of these Supreme Renko bars. We're going to learn 3 simple mechanical setups, and these setups occur numerous times every single day in every market that moves. Again, equities, oil, gold, any futures, any moving futures market, the Forex or whatever. This is one of them here that I use every day, and it's one of my favorites. It's called the sideways cyclical signal, if you will. Markets, if you think about it, the markets are either going sideways or they're trending. They're generally doing one or the other. Sometimes they're doing both. They alternate. But here's one where it was going sideways and then kicked into an uptrend. Now, when the market kicks in, usually what it does, it breaks out of a congested, consolidated, choppy area of price action. It goes up 3 bars and down 2 and up 4, down 1 and up 2. You know, it's a miserable market, and you want to leave it alone. But then it runs, man. It's like somebody took the lid off, and the market runs and runs like a wild stallion. The market will run up X number of bars. Now, I need to see a movement in the market of 7 bars or more, or I'm not interested. But any trader who can count 7 bars of one color, it even counts them for you if you notice. This says you have 9 red bars. When you've got 7 or more, and in this case 9, the code puts a target up here that says, okay, if you get a signal down here, a signal is anything with an arrow, green if we're long and red if we're short, and a little yellow label. And you'll see them at the top and bottom, top and bottom. Not every top and not every bottom, but when they appear, you're good to go, and you get in here, and what I usually enter the market 1 tick beyond the closing price of this bar. And the reason I do that is because price can come up and touch this closing price level and not close. It won't close. It has to go to that price plus a tick. Hello? Has to go to this price plus a tick. And the stop will go, if I'm just going for 2 bars, my stop goes at the opening price of the entry or trigger bar. If I'm going for a bigger profit target, my stop goes at the closing price of the previous red bar. Or the open, if I'm taking a trade going with a trend and the previous bar was blue here and I'm getting in on a blue bar, I would get in at the closing price of the previous blue bar. Okay, anyway, or excuse me, the opening price of a blue bar. Okay, so we see this. Now, what is that? That's just 50%. This system, by the way, is not for the greedy trader. There are traders that see this. They say, okay, oh man, I wish I'd have gotten in here and gotten out up there. Oh man, that's what I wanted. I don't want to sit here and grab 2 or 3 bars. I want to get in here and I want to make all that money. Guys, in 6 to 8 trades, I make $1,000 a day almost every day right in front of my group. If that's not enough for you trading 2 contracts, then you maybe ought to consider lowering your lifestyle. You can do wonderful. Now, five ticks. Remember, if you get in here and take 1, 2, 2.5 bars, every bar makes $100 on 2 contracts. On 2 contracts, if you're trading 2 contracts, and you got in here and you got out there, you would make, with slippage and everything, you'd make $200 easily. There's $200. Then it goes up for 8 bars. Turns, you get in, you're going short because you've got a signal, and there's your target, and you take 1, 2 bars. Another $200. Oh, it might be 180, it might be 160, it might be 190. You know, it'll be something. It's going to be a good little amount. Then you see it continues on down. And here we didn't get 7 bars, did we? We had 6. Okay, 6 bars, that's not enough, so there's nothing to grab up here, and the code doesn't put a target. Here it runs up for 7 bars. And what happens, you know, when sometimes it'll come down 4 bars or something. Well, shoot, by the time you get in the market, you're at your exit point. You're getting in when you ought to be getting out. So that's why I demand 7 bars. On smaller time frames, like a 4-2 or a 6-3, I need 10 bars before I'll take a trade. 10 bars in one direction. That's because I don't want to enter on a 4-2 chart and take 2 bars, and with slippage, I've only made 3 ticks. You'll never see me enter the market for a profit target of 3 ticks. I'm not interested. But here, you've got price coming down and comes down really nice. Well, here it actually went up 7. So you enter here and you take the bar. Well, let's call that with slippage $100. Comes down now for 7 more bars, and this time you can catch like 1.5 out here. So there's 100, call that 140 maybe with slippage, and it goes up 7, and then it comes down. Here's where some guy trying to take his Fibonacci tool and say, okay, it's going to come down to 80% or something down here. He got skunked. The code here didn't, and this is why I go for 50%, is because so many times that's all that's there, 50%. But hey, again, we got the better part of $200 here. Now it kicks into this trend, and I call this a highly directional, steep uptrend. And what I do here is when it runs up, and I've made a higher high to the previous high, and I've made a higher low to the previous low, and I get this, we call this an IB. It's an island bar. It's anytime you get a blue, red, blue, or a red, blue, red. Either way. This one's bullish, the other be bear. But when you get this blue, red, blue, I call them slingshots too, because they kind of look like slingshots if you think of the red bar here as the handle. Get in here at the closing price plus a tick and take 2 bars. Take 2 bars. Now this is assuming you don't know doodly about trade management. You just, every time you try to manage a trade, you say, I could have had $300, but now I got nothing, or now I lost 100 trying to manage trades, and it's frustrating. Where do I get out? Where do I get out? Notice this thing shows you 3 of the most important things every trader needs to know, must know. It's vital, it's crucial. Where are you going to get in? The exact bar, the exact moment. When are you going to get in the trade? Where are you going to put your stop? And where are you going to get out? Where are you going to get out? When you know those 3 things and you're right most of the time, you're unstoppable as a trader. So here we know, okay, we're going to get in here. Our stop, because we're only going for 2 bars, our stop is going to go at the opening price of our entry bar, and we're going to get out here for something with slippage just under $200. Now, if you're trading a 2010 chart where the bar is 20 ticks and the step size is 10, then instead of $100 or 200, you make 200 here and 200 there, minus whatever slippage there is, slippage and commissions and stuff like that. But that's the sideways cyclical, this part in here. This part here is what we see here. This is where the market kicked into a steep, highly directional trend. And you see, once again, you see the blue, red, blue, blue, red, blue, blue, red, blue, and blue, red, blue. All right, now we need to define a trend. I can't take this blue, red, blue because we're not in an uptrend. I can't take this red, blue, red because we're not in a downtrend. This is just choppy market. But when it takes off and it makes that higher high and this higher low, then I can take all these breakout signals. Here's one actually right here, a little breakout. It's not an IB because it came down 3 bars and went up 3, but it's still a breakout. We enter when the second blue bar here, this one, is closing at the same price the last blue bar in the run closed. These two prices are identical, and you get in right there and take 2 bars. Take 2 bars. 2 bars, 2 bars. This is, again, a 10-5, so there's 200, 400, 600, 800. All right? So let's just mark them here. This is where I use this histogram and this, what I call the fast line. This is where they help me, and you'll see how in a minute. So I would take this one for 200, roughly. We'll round it off. 200 here. 200 here. We're still bullish. We're doing fine. 200 here. Doing great. Even going dark blue again, so we've got some strength here. And then what about this one? Do we take this one? No, because now we're buried. This thing says do not, do not, do not take a buy signal anymore. Hang on, because we're coming down. And down it goes, and down it goes, and down it goes. And then right here we get a red, blue, red. And can we take it? Yeah, the histogram and the fast line says go. That's how these things help me. They tell me when things are getting soft and when not to take a trade a number of times. So yeah, we can go here and we get another 200. So 2, 4, 6, 8, 10. That's $1,000 right there. Just well, I'm not trading at 5 o'clock in the morning, but often I am at 5:30. But there's our last little short. Here's the third trade, the third signal. This happens all the time. I think we have one going on right now. So let's study the stretch W and the stretch M. You know, divergence. Many of you guys I know are familiar with divergence. It's been around forever. I think the dinosaurs were roaming the earth when somebody discovered divergence. They've been around for a long, long time. But if you take every divergent signal, you're going to lose. They're a great signal if you know how to filter them and be able to tell this one's going to work, this one's not, this one's weak, this one's strong. Where the strength comes from with these bars, and you can't see this, guys, you can't see it on a time-based chart or a tick chart or a volume chart or any of those other things. Only on these bars can you see this, where it drops with this big long leg, comes up, back down, and then right here on the normal divergence signal entry, when the arrow and the label appear, you're going long. You're going to get in here and you're going to go once again for 50%. But this is 5, 10, 15, 20. That's with slippage and everything. You're just under $400 in one trade. Sometimes these things go for 10 bars, 15 bars on some of these larger signals. They're amazing. But that's the stretch W. This is the stretched M. It's just the invert. We get the big, this is the secret, man. Look at that big long leg. It looks like one of these daddy long leg spiders there, doesn't it? Big long leg, comes back down. You guys see the M? Price draws an M better than I could on a blackboard. And then you're getting in short on the signal, the label plus the arrow, at the close plus a tick. I put a limit order in, let it come to me. I think, you know, the chart says what the market is likely to do. I make the market show me. Show me that what this is telling me you're going to do, you're doing. And come down here and fill. And then down it goes. There's your 50% target for another 100, 200. Oh, I'm sorry, this is a 6-3. So that's 3, 6, 9, 10 ticks. 10 ticks, a couple $100. Now let's take a look-see quickly out here, and you can see how these things actually form in real time. Here's a stretched M. You got that big long run, it drops down to a low, back up to a top, and the top goes a little higher, but that's fine. And now this thing says I can take you down to the target right here. This is again a 10-5, and down it goes. Remember, this could be a 60-30, where every bar is 30 ticks, 30, 60, 90. It's a better part of almost 100 ticks in this one trade. And they all look, a signal's a signal's a signal. Doesn't matter. They're going to look the same, whether this is a 4-2 or a 400, 200, whatever time frame you want to use. So it's great for a long-term investor or longer term. I'm not talking about, months or years. But if you want to get in a trade and stay for a couple of days, you just bring up one of those big monster charts and have at it. Here's another chart here, and we can see the price. Here's one of those little congested directional trend there. This is why I go for 2 bars. There's the breakout and take 2 bars. There's a breakout, take 2 bars. Then coming down, there's no signal here, so nothing to do. But there's kind of it's real sloppy looking, but kind of a stretched W here with a little double bottom. And up it goes. And he says, okay, I'm going to go get half of this distance back. I'd have to get a Fibonacci out to see, but you can see, I think that's probably about 50% right there of the, that's a little more. 50% would probably be about where resistance is here. Then it turns and says, okay, where are we going? We're going to come down and get half of that back because we ran more than 7 bars. We ran 12. So this is a 16-8. There's 8 ticks. 16, 24, 32. It's you can almost set your watch by it. It's so accurate. Not every trade wins, but look at this thing. Look at this. He says, okay, I'll take you up here and get you half of that back. Now he comes down, oh, I'm sorry, you didn't have a signal here, but he said, but the drop here, when the market drops like this, it wants to get half of it back. This is the stretched W. This is real time, guys, and there's the signal right here, and he's telling us, I'm going to get you up to here. And you can see he's on his way. He's on his way. There's the next bar. So and it doesn't necessarily make it in a straight line. He can come up and drop back a red bar or two, then take off again. But it's an obsession. It's a compulsion that price has to get to 50. Not 61.8, not 80%, not 120%, unless you're a Fibonacci guru, and that takes quite a few years. You can learn Fibonacci quick, but mastering it, that's a different story. That's a whole different story. I've tried off and on for 15 years, and I still can't make a dime with Fibonacci. And 50%, by the way, is not a Fibonacci number. Okay, guys, I mean, it just, if you come into the trading room, you're going to see these setups over and over and over and over again. And if you have the passion to succeed, we've got the tools to help make it happen. It does require some experience, practice, skill, training, and mentorship. That's the biggest thing we offer is not only great systems and great tools, but you got me. You got me. Anytime you need me, afternoons, evenings, up until 10 o'clock, weekends, and holidays. Who else does that? Who would give up their weekends with their family, their evenings with their family, their hobbies, to help a trader who's struggling and really, really needs help and not charge them a dime, not charge them 1 penny for hours? And I've spent often 2 and 3 hours sometimes with students. But it's what I do, and I do it because it's crucial to trader success. You can't just hand somebody a system, pat them on the back and say, good luck, go get them, Tiger, and expect them to succeed. It would be a miracle. I've never seen it, actually never seen it happen. But we do have a professional live training. We do these every day, Monday through Friday. Trading room access every day, Monday through Friday, and lifetime access to one-on-one mentorship as a Felton trading student. And that's with me, not with somebody I hire to go and answer your questions and try to help. You need the answers. You need the right answer. And I've been doing this for 17 years, so I've gotten pretty good at helping traders. I've never come across anything now that I can't help. No humps, no bumps, no lumps, no potholes and sinkholes that I can't get you out of. Back on track. For complete details of what we offer and how you can come on into the room and enjoy yourself, not spend a dime, or if you want to get a hold of me for a couple hours, I'd love to chat with you, work with you, teach you what we do, signals we find, great setup. What's a great setup? What's a pretty good setup? And what's a terrible setup? You know, the things you're going to need to learn to succeed. I'll do it, and I'll do it for free. If you'd like to schedule a totally free educational one-on-one session, email Beverly at feltontrading.com. We think you'll be very pleased with what you're going to learn, and you will be a better trader for it. So our sincere thanks to Renee and all the gang at Investor Inspiration and for making this presentation possible. Hope you enjoyed it, and if you have any questions, get a hold of us at feltontrading.com.